Good afternoon, ladies and gentlemen. Welcome back to Trading Options Network. I'm really excited to discuss some things today. But first and foremost, as always, let's go ahead and get this disclaimer out of the way. Everything I discuss is solely my opinion, not the opinion of Trading Options Network. That being said, first thing I'm going to do is I'm going to go ahead and actually get into the economic calendar for the day. All right, as you can see here, we had our GDP and our initial jobless claims numbers come out this morning, both coming out under what was expected. Not exactly the best thing for the market, even though the initial jobless claims, for example, sitting at 207,000, when we were estimating 215,000. When we have high interest rates and a market that is kind of, for lack of a better term, going crazy, we actually want higher jobless claims to slow down the market, slow down inflation, things like that. So the fact that we are getting lower jobless claims, while normally that'd be a good thing, right now that's actually not a good thing. We want higher jobless claims to slow down inflation, slow down spending, things of that nature. That being said, GDP coming in lower than expected as well. If I go ahead and click on it, as you can see here, it says the first quarter 1.6% growth with hot inflation seen as worst of both worlds. So we don't want low GDP. We want higher GDP. Higher GDP growth. Okay. That being said, let's go back here. Let's go ahead and take a look at what's going on in the market today. Yesterday, I had mentioned that we are absolutely 100% going to gap down because Meta had their earnings yesterday after the market closed, and it tanked. It absolutely got destroyed. And being that Meta makes up almost 3% or a little over 2.5% of the entire S&P, you better believe that it was going to cause the market to gap down for sure. Now, this is interesting. For the most part, it has gone up throughout the day. However, about 10, 15 minutes before I started this training, we were actually at close to highs of the day. So if I go back, yeah, sure enough, it has definitely come back down, although it looks like it's starting to go back up again. But, I'm not too worried about that. The bottom line, if I go ahead and shift it over just a little bit, bottom line is we definitely gapped down, and yes, we have come back, but we are still down over 0.5% today. And if we go down here towards the volume, if we look at the volume numbers down here, again, the fact that we have gone up, but the volume is low, and more than likely we still have an hour left. So chances are it'll actually be higher than yesterday's volume, but we're still not getting a crazy amount of volume. So we're not getting a ton of buyers. Again, we have a ton of big companies reporting their earnings after close today and tomorrow as well. So I think a lot of people are just kind of waiting to see what happens. So they're not going to go crazy. They're not going to buy any crazy positions or anything like that right now. They're just waiting to see what happens. So I'm not surprised to see this green candle when we had such a drop down or gap down to start the day. Also, if I do go ahead and actually pull up Meta, okay, as you can see, it got torn to pieces. But, when it gapped down, it opened up all the way at about, 420, 421. Let's see, the exact 421.40 is where it opened. It dropped all the way down to 414. But has since gone all the way up to 445. So that's literally, that's almost a 10% swing in one day. That's massive. That is absolutely massive. And I think one of the reasons why is because, people see this as almost like a FOMO, like, oh my gosh, it dropped down so much. I need to buy in now because chances are it's going to go back up here to these numbers. And you know what? It probably will. Do I see that happening in the next couple of weeks? No. I think, again, as I've been saying for the last week and a half or so, we need this correction. So I think it's going to stay flat. It might go up a little bit and then come back down, kind of maybe just go sideways between 420 and 440. I know it sounds like a pretty big range, $20, but in reality, it's only a 5% range. I think we'll hang around down here somewhere for the foreseeable future. And then, when the market decides if we are going to enter into a true bear market or if we're going to continue the bull market, then Meta will go ahead and, continue and follow suit. That being said, let's go back to SPY really quick. All right. So here we are. This is where we're at for the day. Now, I'm going to go ahead and I'm going to stop here in regards to what's happening on this chart and what's happening with the market. And I'm actually going to discuss a little bit about what I've been doing today. Since we are seeing a pullback, the first thing I decided I wanted to do is I wanted to see if there were any sectors that were actually doing relatively well throughout this pullback. So the first thing I did is I went over to our sectors, and I just kind of went through each one, starting from materials, and I wanted to see the chart. So materials, it's not bad. Definitely had that pullback, but it participated in the pullback. I want to see something that has really not participated in the pullback, or if anything, has actually gone up during the pullback. Communication services, nah. Energy, that's not bad. Yes, it did have a little bit of a pullback, but it's already bouncing back up. So we can look at energy. Financial, it's not terrible. But it definitely has participated in the pullback. And, I'm actually going to open this one really quick and talk about it. I actually do like this. However, today's candle is a little iffy for me. It's right on that 20-day moving average. It is a doji. Dojis are, potential reversal signals, so this can continue to drop down. So I don't hate this chart, but I don't necessarily like it either. Let's go back. So let's see. Industrials, nah, not so much. Technology, definitely not. Consumer staples, this is not bad. It's not bad at all. In fact, I might take a gander at some stocks in here. So let's just, come on. There we go. All right. It's, messing around with its recent highs. Is gap down, but it's gone right back up. It's still above the 20 and the 50-day moving average, although the 50-day moving average is technically above the 20-day moving average right now. So we typically would want to see it reversed, although it's not by much. So that 20-day could very easily, if these numbers, this ETF price of $75 can remain constant for a little while, that 20-day will go right back over the 50-day real quick. So I don't hate this one at all. So I might take a look at some of these in consumer staples, some stocks in consumer staples as well. So far I have energy and consumer staples. Real estate, no. Utilities, ooh, that one looks really good. Healthcare, definitely not. And consumer discretionary, no. So let's go ahead and click on utilities really quick. This one looks really good, actually. So if I go ahead, I'm going to squeeze it just a little bit so we can look back a little further. All right, so if I put a line, of course it would do that, but let's see, boom, all the way back here. Okay, it's not quite perfectly horizontal, but it's close enough. All right, we have already broken out over the most recent high, which was set back in mid-December. We're already eclipsed that. Now we're fighting for the next high, which is, back in July, which is also about $2 higher than what the stock price is currently trading at, the ETF price is currently trading at. And if we get past that, then we can go all the way up to about $70 a share, so on and so forth. And this is, of course, just for the utilities sector. Bottom line, I don't really care about the numbers, the ETF price. What I care about is, does the ETF look good? Is it juicy? Well, this definitely is. I like this setup. I like this chart. It's already broken out past here, and it's broken out past this high over here. So, we could definitely see the utilities continue to climb. So now we have energy. We have, what did I say? Consumer staples, I believe. Yep. and then utilities. So now what I want to do is I want to search these stocks that are in each of those sectors. So let's reset the screener here. Price, I'm going to go under $50 because what I'm doing right now, yes, I could go for options trading, and yes, this is Options Trading Network. But right now, I actually want to go ahead and see if I can get into some positions for the long term, since these sectors are, looking like they could be good over the next, few weeks to a couple months. So I'm going to go for stocks under $50. I want the average volume. Now, typically when I'm looking at options, I go for over 2 million. But if I'm going to be looking at stock prices, buying actual shares of stock, I'm just going to go over 1 million. Now, here's the funny thing, okay? I'm talking about buying shares, yet I'm still going to utilize options to buy my shares. So we'll see how that works here in a second. First sector, though, energy. All right, let's go ahead, and I don't care about these stocks that are like 17 cents, 37 cents, these penny stocks. Chances are, there's a reason they're down there. I don't want to touch them with a 10-foot pole. So let's go ahead and sort from highest price to lowest price. Top one, Schlumberger. It's really not Schlumberger, it's Schlumberger. That one is not looking promising to me, so I'm not going to touch that one. What I want is, because these sectors are the ones that are outperforming compared to the market right now, I want to see stocks in the sector that are doing well. That one's not bad. Keep in mind, I might have to come back to that one. Murphy Oil, that one's not terrible. Actually, let's see if we can go back a little bit further. I don't know if I would really want to touch this one, because even though it's in the very recent future, it looks really good. If I go back, it looks like it's had a hard time getting much further than where it's at right now. So, I don't know if I want to get shares of that one right now. How about Noble Corp? Nah. I like this chart a lot. It has done nothing but gone up recently, and it is at all-time highs. That is great. So not to mention, in its most recent trading, it actually has what you would call an ascending triangle. So, two things are going to happen here. It's going to break out to the upside, or it's going to break down to the downside. Based on this chart pattern, it is more likely to break up than down. So I really like this one. So I'm going to go ahead and I'm going to look at the options chain. And while no, I'm not going to buy or sell any options through FinViz here, I'm just using these to show you what I'm going to be looking at when I get into these positions. So when I buy shares, I do not just go and buy X amount of shares of a stock. I think you're losing money by doing that. What I do personally is I utilize a cash secured put. Now, if you don't know what a cash secured put is, I have videos training about cash secured puts, but that's how I am going to buy my shares. So looks like the next expirations, this is only monthly expirations, not weekly expirations. Okay. So I'm going to go ahead, and because I like this stock to go up, and yes, we still have 4 weeks basically until, 3 weeks, 4 weeks. I guess it would be 4 weeks. 4 weeks until, is it? 3 or 4 weeks, whatever it is. I think 4. Anyways, because we have a little bit of time and I do like the stock moving up, I'm going to actually look at selling a put that is actually higher than the current stock price. Because if I'm stuck and I am assigned to buy 100 shares of this stock, I'm okay with that. Because again, I'm bullish on the position. So I'm going to look at this $44 strike, and I'm going to come over here, and sure enough, I can get $1.70 probably. If we go ahead and split the bid-ask spread down the middle, I can probably get $1.70 on my in premium on my cash secured put, which means if May 17th comes around and I am assigned, so the stock price does not jump over $44. So I'm assigned 100 shares at $44, but I'm getting a $1.70 in premium right now. I can subtract that $1.70 from the 44, and it would essentially be the same as me buying the shares on May 17th for $42.30. Okay, if you didn't catch that, if I get a $1.70 in premium, I can subtract that from the strike. So it would be essentially the same as buying shares for $42.70. Now look, right now the stock price is trading at $43.21. So if I bought 100 shares right now, I would be buying 100 shares at $43.21 or $4,321. But again, if I go ahead and sell the 44 strike put and get a $1.70 in premium, two things are going to happen. It's either going to expire worthless, in which case I make a $1.70 or $170. Now, if I do the math really quick, let me pull out my handy calculator here. $170 divided by $4,400 investment, that's just under 4%. So I would make just under 4% in less than a month on one options contract. That's good. Okay. If you're following people that are claiming that they can get 4, 5, 10% a month in, month out, don't listen to them. They're absolutely lying. A good professional options trader should get between 20 and 25% annually. Okay, so 4% on one trade in a month is not bad. So I'm going to go ahead and I'm going to sell a 44 strike put on NOG. Okay, and I'm going to hold it until May 17th. Now, on the flip side, if the stock does not go over $44, the stock stays under $44, and again, I'm going to be assigned to buy 100 shares at $44, but again, I can subtract that $1.70, so it would be equivalent to buying the shares at $42.30. So let's say, the stock settles at about $43 on May 17th. Well, I'm still up 70 cents per share. Okay. In fact, before I'm in the red, this stock would have to go below $42.30. And again, if I go ahead and look at the chart, let's go back. Here we go. 42.30. I mean, it could very easily happen. It's right there. Okay. There's our 42.30. Can that happen? Absolutely. Do I care if that happens? No, not really, because I really like this stock to the upside. Again, we're already at all-time highs. Okay, we're threatening to break out and go even higher. So I really like this stock for the long term. So this is going to be a long-term hold for me. This is the only time I really hold any positions for the long term is if I actually hold shares. I don't hold options for the long term. So NOG is definitely one that I am going to open a position on. All right, let's see what else we have. Valvoline, and oops, didn't mean to do that. Ooh, why is my computer really laggy all of a sudden? All right, there we go. All right, Valvoline. Not as good as NOG. Oh, this one's not bad. Let's see if I look back a little bit. Oh, it's gone on a tear as well. It's at all-time highs. That one's not bad either. Now, yeah, this is definitely another one. Let's look at the options chain really quick to see what kind of premium we have. It's a decent bid-ask spread. It's only 20 cents. Okay, so that's not bad. Again, May 17th expiry. So this would not be a bad option either. $1.90. Now, I've already chosen NOG. I probably don't want to get another one right now. But, if I were to go ahead and sell this $43 strike at $1.90, splitting the bid-ask spread, and I got assigned, it would be like buying 100 shares for $41.10. That's 90 cents under what the stock is currently trading at. So that would not be a bad option. It's not quite as good of a chart as NOG, but it's still a darn good one. Okay, the only reason I like NOG better is because the stock price is currently trading at higher highs than recent highs. Okay, it's currently trading at a price that is higher than its most recent highs. So that's the only reason why I like NOG a little bit more than MPLX. But this is really not a bad choice either if you wanted to go with MPLX over Northern Oil and Gas. Let's see. That one. Ooh, EQT. If it weren't for the fact that it has been more bearish recently than anything, this is not a bad chart. I mean, it's still not a bad chart. This could very easily come up here to, recent highs of around $43, $44. Very easily. It did just have its earnings. So this is another good one. If you wanted to go ahead and try and get a long-term hold on a stock, this is not a bad one at all. If we do go ahead and go up towards those recent highs of $43, $44, and then it breaks out and past that, we can go substantially higher, possibly threaten to go see all-time highs of around $50. So yeah, actually this would be a really good one. The more I look at it, the more I like it. So EQT, I'm actually going to write that one down as an option. All right. So there's a couple of energies, and that's exactly what I do when I'm looking for positions. I'm going to look at the sectors first, see which ones are performing well for bullish positions, see which ones are performing really poorly for bearish positions, and then I'm going to look for those stocks that are equally performing well or poorly in those sectors. So after energy, we said, what was the other one? For sure, utilities. And let's see here. If I go back. Come on. There we go. It was a consumer it was consumer staples. So let's go ahead. All right, they're back to EQT. Go back. All right. So let's look at consumer staples. I always mix these up. I'm pretty sure it's the defensive, but I just want to verify really quick. Yeah, consumer staples. Okay. Consumer defensive. All right. Yeah. So, gosh, I always mix these up, and I can't stand the fact that some say consumer cyclical, some say consumer defensive, some say consumer staples, and then some say the consumer discretionary. So I'm just making sure that I am looking at the right one. XLP, let's just check it really quick. So we have S&P Consumer Select. I'm pretty sure. Let's see. It says Procter and Gamble. Yeah. Okay. Yeah. I was right. Thought I was, but again, I always want to make sure that I am absolutely positively right. So, again, I got my under $50, over $1 million in volume, and price is already filtered from highest on down. So, let's look. Definitely not that one. Campbell Soup, that one's not bad. Let's take a look at it a little bit further, a little more in depth. I'm not liking this. It's trading more around not all-time lows, but its lows in the last couple of years. So even though it has broken out in what appears to be its most recent channel, I'm not totally in love with it. So let's not mark that one yet. Maybe we can come back with it if we don't find anything else. That's quite a green bar today. What is going on? It had its earnings. Okay, but again, it's definitely trading at its lows for the past few years. So let's not go ahead and do too much with that. Altria, same thing. Let's see if we can find one that has been Kraft, possibly. It's better. Okay, it's been very, very neutral for the last 3 years. It has not broken really below, with the exception of maybe right here. But otherwise, it hasn't broken much below $32 a share, and it hasn't broken that $44 a share. It's been between those two prices for the last 3 years. If you go back even further, actually it doesn't even want to let me go back any further. It's definitely seeing higher highs, that's for sure. So, again, I'm not super in love with this one, just because it is like a very, very large descending triangle that could go on for a long time. So I'm not in love with Kraft. This one, maybe. I don't love it. Yes, it has broken out from its last earnings. But again, I don't love it. Let's see. There's a showdown here when its next earnings is. I'm not seeing it right away. I don't want to spend. Oh, there it is. February. Oh, that was the last earnings. Okay. So probably won't have earnings until sometime in May, like mid to end of May. So we could potentially hold it for a little while, but again, this one's been beat down for a while. I'm not super in love with that. So let's get out of there. Let's see if we can find one that I do actually like. That looks like it had its earnings today. Nope. Let's see. Nope. Maybe. Do we have a winner? I like this one. It's definitely broken out of a recent channel, but again, it's just a lot of these consumer defensive stocks are trading at lows, that we haven't seen in a while. But I do like this one. So, FLO. Maybe we have a winner here. I like this. It's relatively new stock, though. Let's just look at the options chain, see what kind of bid-ask spreads we have. They're pretty tight. Okay. Again, it's monthlies. But I do like the fact that I can get a monthly $22.50 strike for probably 45 cents. I actually like that one a lot. I'm going to mark down KLG. Because even though it is a newer stock, I am going to sell a 22.50 strike put, of course, for 45 cents. That would be my goal, to get about 45 cents. Because that would mean this stock would have to drop to almost $22 a share for me to actually lose money. That's more than a 10% drop on a stock that has been absolutely crushing it. So, that's, for me, that is that's an easy one to do. And you know what? Maybe that'll happen. But the bottom line is it's a nice looking stock. And if that were to happen, let's say it drops all the way to $16, then you know what? I will take that loss. But right now I do like that chart. So that is definitely one I'm going to look at. Let's see if we find anything else. No. Here's a nice one. Primo Water. Ooh. This one. Ooh, I like this one a lot more than KLG, because this stock has been around for a while. It is flirting to break out of this little resistance line. This is definitely one I like. I want to see it break through. So let's go ahead and look at the options chain. Let's see, maybe the $20 again, monthlies again. Okay. But let's see, $20. I can get, about $1.30. So that would put it down to around $18.70. Okay. So you're not getting too much more value than what the stock price is currently trading at, but it's still, it's 21 cents lower than what the stock is currently trading at. So it's not a bad option. So I'm definitely writing that one down. PRMW. All right. Let's go back. Oop, I don't know why I did that. There we go. And you know what? Oh, that's disgusting. Oh man. This one has not participated at all in anything. And it has earnings coming up. If there's ever a time to gamble, this may be it. But I'm not a gambling man, at least not here. Throw me some cards, play some poker. I'm down for that, but I don't gamble with the market because I have no idea what's going to happen. So that is a nasty chart. All right. Anyways, let's go back to the last one. Let's look at some utilities. Okay. So we have 23 different tickers here. Again, they're already by highest to lowest. So let's look at First Energy. This one's looking good already. If it can just go a little bit higher and break these recent highs, that looks like some really, really heavy resistance. Some very strong resistance here. If I just go ahead and mark this line. All right. So yeah, that is definitely some strong resistance there, but if it can break through, that is definitely one that can run for a while. Possibly up to, a little over $40 a share. Yeah, it's not a bad one at all. I like First Energy. Exelon, I think we've all heard of Exelon. It's a big company. Not super fond of this because, again, it's been in more of a downward channel. I think we could find something better. Nah. Ooh, let's look at Centerpoint. This one's definitely broken out of its most recent channel. Of course, again, it has super, super strong resistance right around here. Okay. But that is still a 10%, almost a 10% gain. Oh, and it has its earnings in 5 days. So I'm probably not going to want to play this one. Okay, just because of those earnings. But if it weren't for those earnings, I'd love that chart. NEP, no. NiSource, I guess. This one looks really good. It's definitely past these highs from last September. There's you can argue there's a little bit of resistance around $29 a share. I like this though. I actually really like this one, so I'm going to write this one down, NI. All right. Let's see. Actually, let's go ahead and look at some of those options. choices. Okay, so again, monthlies. But $30, ooh, that is a big bid-ask spread. So that is not very promising for us. $1.70 to $4.10. So I think, you know what? Just because of that bid-ask spread, I'm removing this one from my list. I do like it, but this will be one of those where if I were to buy shares, I would have to probably just buy the shares outright and not by utilizing a cash secured put. But I do like that chart. Let's see if I can find a chart that I'd like that I can also utilize cash secured puts with. Oh, looks like this probably had earnings. Oh no, it has earnings coming up. Yeah, I don't like that one as much. Let's see. PCG. Good old, it's not Procter & Gamble. Why can't I think of what it is? There's this PG&E, that's right. Utilities company, I think, in the West Coast. Anyways, this one has earnings when? Oh, it was actually today before the market opened. Hence why we have that really big handle. So not only, okay, that's interesting because the earnings did not cause a gap up or down, but once the market opened, it looks like it just tanked. But it has done nothing but recoup all of that all day. That is very strong. And the fact that we had earnings, we know we don't have earnings for a while. I like this one a lot. I am 100% writing this one down, and I know PG&E should be pretty liquid, so it should not have a huge bid-ask spread. And we have weeklies, so we don't have to go all the way to May 17th if we don't want to. There's no value there, but maybe considering it expires tomorrow, what if we just go 1 week out? $17.50. Not a whole lot of value, maybe a couple pennies extra as opposed to just buying the shares. What if we go 2 weeks out? And now the bid-ask spread is actually a little bit wider. I don't like that. Maybe we do go all the way to May 17th. Yeah, we get a little bit more value, of course, because there's a lot, more time till May 17th. But nothing crazy. So I actually kind of like the May 3rd, honestly. Oops. I may only get it for like 52 cents, which means I'm only getting maybe, 3 or 4 cents in additional value. But again, that is how I buy my shares. So PCG or PG&E Corporation, I will definitely look at selling. I mean, heck, I could even sell the 17 and get 20 cents. So if it does drop a little bit, now I'm buying shares for equivalent to $16.80 as opposed to $16.98. So that is an option too. I'll have to decide what I want to do, if I want to actually buy one that's already in the money or if I want to buy one that's more at the money. Okay, but I do see PCG. Let's see. There we go. Excuse me. I do like this one moving upwards, so I think I will sell the 17.50. But nonetheless. All right. So again, I just wanted to go ahead and do a little bit, a different training today. I wanted to actually give you guys an idea of exactly what I'm looking at when I'm looking for positions. Okay. In this case, I'm looking for more long-term positions. Now I do the same thing for short-term positions too. Okay. I do. So if I wanted to, let's say because I do believe that the market is going to be moving downwards. Okay, we're going to be having more of a pullback than we've already had. I know technology off the top of my head has been just, almost too bullish for its own good. So I'm going to look at over 20. And I have 141. Actually, let's make sure they're optionable. Okay, over 2 million for my short-term options. Okay, I still have 87 opportunities. Now I can go to the technicals and I can say, hey, which one is below the 50-day moving average? I still have 66. What about below the 20-day? Now I still have 56. So here are a lot of stocks. NVIDIA, that's a very, very big number. Let's go ahead and go by volume. Intel, I believe, had its earnings this morning, if I remember correctly. Yes. And they were decent. So probably not going to get a bearish position on Intel right now. NVIDIA, AMD, I actually closed my bear position on AMD this morning after the market opened. Why did this happen? Let me get rid of these Bollinger Bands really quick. All right. Good Lord, that is a lot of lines on there. There we go. That's a little better. Okay. So, AMD, like I said, when it hit down here at these lows, I went ahead and sold my short-term position, my bearish position on that one. Microsoft had its earnings today. This is another one. I actually closed my short-term bearish position today. IBM, that one got smoked today. Looks like it had its earnings yesterday. Yep, that's right. We talked about that one. So I'm not going to touch that one right now. Uber, let's see. Uber's earnings are May 8th, so we still have a little bit of time. So yeah, I definitely like this one to go back a little bit. So alrighty. So I think Uber can definitely pull back more. Maybe around $63 a share. That might be my target price. So I might look for a short-term bearish position on Uber. But again, this is exactly what I do when I'm looking for positions. I'm looking for strong or weak sectors in a strong or weak market. And then within those sectors, I'm looking for those strong or weak stocks with respect to their sector. That's all I do. There's not a lot to it. So I know this is a longer training. I hope you guys learned something. Almost 45 minutes now. But, I'm going to go ahead and get these positions open for my own portfolio. Again, they are my opinion. Everything I discussed was simply my opinion today. I'm not saying you need to go out and buy these positions. I don't know what's going to happen. Okay. Again, it's just my opinion, but it is what I like. So I'm going to go ahead and open these positions for my own portfolio. That being said, I hope you guys did learn something. I am out.